Raoul, I really was looking forward talking to you for a long time, and I'm super excited actually talking to you and picking your brain on different major topics. It's exciting times which we're living in. But before we start, give us a quick rundown on your background. Who is Raoul Pal?
Yeah, I mean, I'm my father's from India, my mother's from Holland, and I grew up in England. So I'm a bit of a mongrel, a man of everywhere and nowhere. I then my career was in finance, so I ended up I worked for a number of investment banks in the UK. I ended up starting and running the hedge fund sales business at Goldman Sachs in the late 90s, which was the kind of golden era of the hedge fund business. I then left and moved to Spain to live on the Mediterranean coast. It's, you know, weather is something important to me. Once you live in England for long enough, you decide you need to leave. And I started writing Global Macro Investor, which is my kind of institutional research service, which I still write to this day, which is read by most of the world's kind of largest hedge funds, sovereign wealth, family offices, that kind of stuff. So I wrote from there for 10 years, and then crazy idea of starting a video company called Real Vision, which I started. And in the middle of that, I also ran a global macro hedge fund for GLG Partners, which was the largest hedge fund firm in Europe. So I've done a bunch of things, and now I live in the Cayman Islands, small group of islands in the middle of nowhere, warm and sunny.
So how is it about Corona there? You have to wear masks outside, or any restrictions?
So we, interestingly, a good friend of mine is a German doctor who runs the largest hospital here, and we had lunch on my birthday in February the 5th last year, and I was explaining what was coming, and he's like, okay, I need to take this seriously. And so he went and ordered all the PCR tests and everything else, imported a scientist. The government took it really seriously. We went into hard lockdown immediately, I mean, super hard lockdown. Wow. We got rid of the entire virus within 3 months. And then we closed our borders, kept them closed. Anybody who comes in has to quarantine for 2 weeks. You have to have a reason to come in, like you have to be somebody's relative or you need to live here. You have tracking and tracing, so you cannot break quarantine. Yeah. And we've had zero virus and zero restrictions ever since. And I asked him, I said, what did we do right? And he said, simple, we just followed the WHO guidelines and they worked.
Wow.
And I'm like, oh, wow, okay. Now, it's easier being on a small island, but it worked phenomenally well. So it's been the best place in the world to be for this.
Okay, because we are in the third lockdown since November. It's crazy, and there's no relief on site. So it's horrible, actually. People are really suffering. Businesses are suffering. So yeah, I want to get right into it. We are living in historic times, I would say. We are at the end of the super debt cycle. We have the worst demographics in 500 years, and close to the climax of the fourth turning, a global pandemic. So it's like we are in the end game. So it's a crazy world out there. But maybe also the most exciting times for you as a macro guy. So what are the things you pay most attention to right now?
I'm actually changing my framework of how I think. Good. Because of the point you just raised. We all knew this was coming. Not a pandemic, but we knew the end of the debt super cycle, where all interest rates are zero, where the only monetary policy left is printing money, where fiscal and monetary policy mix because it's the only way. Yeah. Where we've got this massive group of retirees, and in other countries like the US, we've got a massive group of millennials competing for the same jobs as these people as well. So we've got massive deflation, structural deflation, yet we've got asset price inflation. So we've got this kind of end of world scenario, throw in a pandemic, and the markets are all-time highs.
Crazy. Yeah.
Now,
why?
This is the point, is you need to then step back and say, okay, what are we missing? Surely this is when the world blew up, right? Well, it did, and it didn't. And that's the problem that people are coming to grips with now, is understanding, okay, so what does it mean from here? It means to me that there is almost no chance of a massive global debt default where the banks all go under, because it should have happened now. Yeah. When you stop the global economy and have the biggest recession pretty much in recorded history. I mean, the UK was the biggest recession in 500 years of recorded data, and we didn't blow up the banking system. It tells us something. What is it telling us? It tells us that what we all thought would be a climactic end is probably going to be a gradual taper end. And I'll come on to what I mean. One of the things I did was, when you look at the S&P, it's like gone like this, or any of the stock markets. I realized that we're probably using the wrong denominator to value assets. When you change it to take into account the monetary printing, so you use the Fed balance sheet or the G4 central bank balance sheets, the S&P has gone sideways after devaluing 50% in 2008, 80%, which was the same thing when you look at the Venezuelan stock market and you put it in dollar terms. After the big deval, it's kind of traded sideways. But on the chart, it looks like it's gone exponential. It hasn't. And this is true of all assets, real estate, gold, all of these things. They all look roughly the same against the balance sheets. But everyone's saying the S&P is super expensive. But when I look at the S&P versus gold, it's not wildly expensive, or versus real estate. So those three are pricing correctly. It's the denominator that's changed. So that's one thing. So that suddenly makes more sense. Price everything in the balance sheet, and you get an idea that maybe things aren't so crazy. But what is happening within that is this difference between assets and wages. Things that have variable input, wages, are low, and assets keep going up, which makes this rich-poor divide keep continuing. But the central bank's pumping money in also. When you then look at like a company like General Electric, there's a BBB rated, hugely indebted, old-fashioned stock. Divided by the Fed balance sheet, it's basically a zombie. So is AT&T and most of these big old companies. And you're like, oh, of course. But when you price Google or Facebook, they don't look anything like it, because they are modern technology companies built with kind of big margins and adoption effects and network effects that's part of this changing technological environment. So we've got technology going on that's real, and everything else is being hidden by the devaluation of the monetary base. And that's a global phenomenon. So that's why we're not seeing a cataclysmic decline, because it's being offset by a decline in the value of fiat money. When you look at gold versus a basket of 27 global currencies equally weighted, basically it suggests that since 2008, currencies have devalued. Fiat currency overall has devalued 60%.
Yeah.
So all of this is a mechanism by which it stops this default moment. So where does the end game lie? Well, we kind of know that the central banks are going to move towards more fiscal, more printing, more of this. It's going to create more of the denominator effect falling. Asset prices look like they're rising, but you're actually probably not getting any richer. And then you've got something going on the side, which is this parallel system that's being built. And as opposed to a big bang moment, where suddenly there's no money, the Cyprus or the Corralito moment, that's not coming. What's coming is the gradual movement, migration of people into the new digital world, which is the crypto world. And that's happening. Even the central banks are going that way. So having seen that we're not going to get the implosion moment, I realize we've actually got a migration moment as the central banks basically try and manage the decline of fiat currency to keep the system afloat. People will slowly move across to the new world. So that's what I think is going on here.
So you think we're experiencing a paradigm shift away from fiat money to digital money, like central bank digital currencies, Bitcoin, digital euro or dollar? Because we see the central banks, they can't stop printing money. They can't raise the rates. It's not possible, because the whole house of cards will implode. So they have no other choice than printing more money, leave the rates on a very low level, historic low levels actually, and perhaps even they need the digital currencies to put the rates even lower, so they have negative interest rates, and they only can do this if we have no fiat money anymore, like no currencies or bills in our hands. Because this is like, for us, we could escape the whole system if we go to the bank, do a bank run, take the money out of the bank and go and put it somewhere at home or in the deposit box. So you think this is the plan to keep the wheel running?
It's part of that. There's an acknowledgement that the world is now digital.
Yes, of course.
This is one of the reasons that gold is diverging from Bitcoin now, is the world is digital. We need the digital currencies. So the central bank digital currencies are good for that, just general transactional stuff. But also, as you rightly say, you can use them for monetary policy more effectively than you can use the current system. But even more powerfully is you can use them for fiscal policy as well, Sim.
Yes. Yeah.
So different people can have different tax rates, different interest rates, different, let's say, maturity dates. So you can stimulate. So if the world has no monetary policy left, then fiscal policy becomes the tool. It's too blunt. What I want to do is I want to give small restaurants, hairdressing salons, dry cleaners, stimulus check. I want to penalize corporations with higher taxes to pay for it. And I want to do that. I can do it all at the same time in an instant mechanism. There's all sorts of things you can do. You know, you can penalize certain savers with larger negative interest rates, and you could give young savers positive 5% interest rates. That's all possible with this kind of mechanism. Now, it's early days. We don't know where it's going to go, but it feels that this is a quantum leap forward in how we manage economies.
Raoul, that's a very interesting point, because I wrote something similar in my new book, and I called it the digital dictatorship, because I don't think we need banks anymore in the future, because we could have an account at the central banks directly. They get rid of the overbanking system anyhow. That's what they planned for years now, and then they could even put what's it called? Sorry. Penalties on people who don't behave, like in China, you know, with a credit social program, for example. If you don't behave right or vote wrong, or if you say something the government doesn't like, then you get just a penalty on your account, and they just withdraw money directly, or they even close your account. So do you think there's a possibility that one day the ECB or the Bank of England, we all have accounts directly at the central banks?
I think Europe knows it's got a deep problem with its banking system. There's no way to solve the German banking problem, or the Italian banking problem, or the Spanish banking problem, or the French banking problem. There is no way to solve it.
No,
it's all part of this debt super cycle. There is no way. So the answer is get rid of it entirely over time. So if you have a central bank digital currency and a wallet with the central bank that then connects you to the rest of the digital world, then let DeFi lend you the money, let DeFi, let innovation happen, and that's okay. We can all have the financial services we need without any of the risk, and we can basically over time shrink the entire banking system to nothing. The question is can governments use that for bad means too? My argument is that governments do that anyway.
Yeah,
yes, they will probably abuse it, but you know, if you park in a street with 2 yellow lines, you will get a ticket. And there's nothing you can do about it. If you do things that government or society doesn't like, you are penalized for it. So I don't think it's that different. Everybody wants to rush to the totalitarian nightmare state. You know, we live in democracies. We'll accept certain amounts, and certain amounts we won't accept. And that's okay for me. I'm not wildly worried about it. People talk about, well, the privacy, you know, we're giving up. I'm like, what bloody privacy? Every transaction on a credit card, every bank transaction. So, okay, so now it's cash. Well, how much cash do you actually use? You might pay your gardener in cash, but you don't actually use cash. So who are you hiding from? And meanwhile, you're telling people, we want privacy, and you're on Twitter telling everybody, or you're searching Google for where do I hide my banknotes? I mean, it's ridiculous. So I don't really believe in it. I think it's a narrative. But yes, governments have a tendency for overreach, and our job as citizens in a democracy is to police them on it via voting or moving our money out of the economy. And we have the right to do that.
Yeah. But aren't the CBDCs nothing else than fiat just on the blockchain? That's nothing.
Correct.
They can print even more. We don't even know how much they print. M1 will go parabolic.
So I have another hypothesis.
Yes.
Is that, okay, we're seeing a lot of talk now, even from Janet Yellen, about a new Bretton Woods. And I talked about this.
Yeah.
And what they're talking about is they're talking about some sort of tax equalization for corporations. Okay, that's not a bad thing.
Yeah.
They're talking about potentially allowing for a massive fiscal stimulus across all nations. So if you all do it at the same time, nobody's currency gets slaughtered. So if everyone says, right, you're allowed 25% to rebuild your economies after the pandemic and retool them for the modern age, it has to be green, it has to be whatever it is, right? Everyone gets to do it. So we know what that means because we talked about it earlier. It means the value of fiat currency diminishes.
Yeah.
So we'll see Bitcoin and gold and equity markets take off. We get the economic stimulus. So it's a good thing. Is it inflationary for some things not because of technology and demographics and all of those things? And then what happens after that? Imagine if they, like the old European exchange rate mechanism, they say, fine, if you want to stay now in this G20 basket currency that we're going to create, so we don't have currency wars, that you can only extend your money supply by 2% a year. If you cheat, you're out. That becomes actually not bad. Now, governments over time will always cheat. You know, we saw it with the ERM that stuck together for about 10 years, but ended up being the euro. But maybe there's a way that they try and do that. So then they basically make it look like a cryptocurrency with reduced supply. Again, it won't last forever, but there's a possibility that they do that. So we don't know. And, you know, you and I talk about the fourth turning. These are the kind of things that happen in fourth turnings, things that we don't imagine, new ways of doing things. And what we shouldn't be doing is looking back. We should be looking forwards and saying, what are the possibilities? Not what did the world look like? Because that's not what the fourth turning is about. The fourth turning is everything entirely new.
Yeah, exactly. We know the fourth turning. We know something big will happen. Everybody wants something to change. People have obviously different ideas and vision, but it doesn't matter if you are on the left, on the right, a crypto anarchist. Basically, everybody wants a different system. So you talked about the Bretton Woods, new Bretton Woods system. Janet Yellen was talking about. So you made an interesting quote. Actually, I have to read it. You said the fourth turning is upon us. Accept everything to change. I get the feeling the next 10 years will be nothing like the last 30 years, and asymmetric risks are now skewed to the upside and not to a downside. But downside risks are not eliminated, of course. So what do you mean? What do you expect for the next 5 to 10 years, or when will this fourth turning end? I read an article from Neil Howe. He said it started 2008 with the financial crisis, and he expects to end it 2025, for example.
Yeah, I think that's about right, somewhere around then. So I sat down in that whole process of rethinking my framework. And having been involved in crypto and realizing the power of network effects, it made me understand Google and Facebook and Tesla and all of these things. Because I fought it like most of us, because we're mean reversion people. Oh, it's overvalued. When you put it on a log scale and put nice regression lines, it's perfect. It's network effects. So we're using old tools to value new things. We're seeing the internet is a network effect. We saw that with mobile phones, but there's very few of these we've seen in the past. But now we've got so many, crypto being probably the biggest of all, because it's the system of money itself and value. So it's not just even money, it's the whole system of exchange of value, store of value, trusted value, ownership, everything. But then when I started looking at it, I wrote an article about the EU ETS, the carbon trading system, which is super interesting in itself. And it made me realize that by 2030, the EU is going to reduce carbon emissions by 65%. Within that mechanism is a whole green fund that's being funded by these carbon credits. And they look to reduce all gas-based, petrol-based cars off the roads almost entirely. I was walking through the street here in Cayman and I realized in the next 10 years, every single car on the road here is obsolete. Everybody you know, every single person on earth basically is going to have to buy a new car or two or three. I'm like, huh. And then you think every form of electricity is about to change. Everything. Because it's mandated globally now. So the adoption effects of the electrovoltaic revolution and the alternative energy revolution is real. Then it made me think about the vaccine and the mRNA vaccine and how that had been under development for 20 years. And the moment this virus came, they basically solved it in 2 months and they rushed it through. Now, when you realize that most of the people who were working on this form of vaccine were actually working on cancer and malaria, you're like, okay, if we're going to allow these things through faster, the rate of change of this kind of stuff is huge. So that's interesting. Then when we think about stuff like computing power, so once you've got more electricity, the next part of a digital revolution or this revolution we're in is you need more computing power. Moore's law was the old way, the chip. But now we have distributed computing power and edge computing. So what that means is somebody can rent the computing power of your mobile phone, your office computer, whatever, and pay you for it. Okay, that's fascinating because it massively increases the amount of computing power in the world. It also generates income for that computing power. So that's interesting. Then we've got artificial intelligence, which is now rolling out everywhere. It's not just on Shopify or Amazon or Facebook. It's everywhere, including in the biosciences. So, big data models, large computing power, and artificial intelligence is creating an acceleration in the rate of change of the genomics project and the understanding of all of that. It's also changing manufacturing to everything else. The next thing we've got is autonomous driving. That's real as well. It's now not something in the future. Yeah. I mean, Waymo, the Google project, is already got cars out and Tesla's working towards it. So that's complete change. And then there's a whole bunch of these. There's robotics, virtual reality, the online metaverses. All of these things are all coming exactly at the same time. And they're all adoption effect models, network effects. So they're all exponential to the upside. Yeah. So my view is we're about to see the fastest pace of technological change in all human history, and it's going to happen in the next 10 years. And none of us are ready for it.
No.
And we're still looking backwards and not forwards.
And they're all deflationary,
Without question.
Exactly, and everybody accepts inflation because the central banks and the governments, they print as much money as they can. The debts are in new record high, but all what you mentioned right now is deflationary. So I guess you expect deflation in the future, not inflation or hyperinflation.
I think we're going to go into a structurally deflationary world. And the more we adopt currencies like Bitcoin, I mean, everything deflates versus Bitcoin right now.
Yeah, true.
Right? I mean, everything. Yeah. You wait, 3 weeks to buy a car and it's 30% cheaper in Bitcoin terms, right? That's what deflation, that's what deflation is. That's why people hold Bitcoin, because all assets deflate versus Bitcoin. I think we are going to a deflationary world. The issue we've got is that wages haven't gone up in real terms in 40 or 50 years. While assets have gone up. And this is the issue with printing of money. Also, the wage part of the economy is globalization, too many people in the labor force, baby boomers plus millennials, globalization, the rise of technology, all of these things have an impact on wages. So I also think universal basic income is coming. And is it directly funded by government, or is it funded, for example, by your attention on the digital economy? Do you get paid to watch adverts? Well, that's coming too. So, I mean, I don't think there's an inflation in our future. I think we're going to live in a structurally deflationary world. We will continue to see asset price inflation for the time being until that eventually stabilizes over time. But what an incredible world to move into. And that's why I say you and I have grown up thinking about the downside shocks of the debt supercycle. We're now at the point where we threw everything at the debt super cycle, and the outcomes are only creating upside tail risks now. There is no downside. How can you have a stock market down 80% now? How does that happen? It can't, because you changed the denominator. Yeah. It's impossible.
No, the Fed will definitely print money and will buy everything up. That's the thing. So what time frame do you have? Do you expect a deflationary shock as well? Or what do you expect? The deflation will come in the next 5 to 10 years, or just step by step?
Step by step over time, as all of these things compound on themselves. Yeah. But yes, I mean, you're basically taking away jobs from the workforce bit by bit.
Yeah.
So to compete against machines, you have to have lower wages. So wages cannot go up.
Yeah.
So people are going to have to think of different ways of creating wages. Interestingly enough, I think the digital world will create that. I think that the digital world of virtual reality, gaming, and the ability to live in these metaverses and generate income and socialize and go to events and all of these things that is happening right now is basically like discovering the Americas. We're going to increase global GDP gigantically because we've discovered a new world that is not constrained by the existing constraints of, how much copper can you get out of the ground? How much concrete can you get? This is very interesting.
So you're super bullish, actually.
Yes. Bizarrely, right? This is bizarre.
No, it is, but that's what I love about you, that you always change your view and that you're open-minded and flexible, not narrow-minded or just dogmatic. So it's interesting point. It's definitely a good point. So.
And that doesn't mean the transition is smooth.
No.
That doesn't mean we won't have problems. It doesn't mean that the working classes don't get screwed for another 5 or 10 years. This is not a utopian world, but what we are walking into is a very different world than we've come out of. So what we thought of were abnormal, which was the Facebook, Google, the FANG, is going to be the new normal. And that's interesting because we can generate wealth. And I didn't think we could in a debt-laden world. But as long as these things outperform the debasement of currency, which they are, only technology, only the NASDAQ, outside of crypto, only the NASDAQ has outperformed the Fed balance sheet since 2008 lows meaningfully. And that makes sense to me.
So how does your portfolio look right now? What's your advice for the audience? How should they invest?
So also there's another part to this before I go into that.
Yeah, please.
Is obviously, I was bullish on emerging markets because it's the time in the cycle. I don't think the dollar goes significantly lower. I think it probably range trades because all of the central banks do not want a strong dollar or a weak dollar. They just want everything to stop moving. The no volatility world of interest rates and currencies is good. So that's very good for emerging markets who've been undervalued over time. But now you're going to go to a step change. You're going to take poorer economies. You're going to throw in Starlink satellites from SpaceX and 3 other providers that gives everybody Wi-Fi connectivity globally. You're throwing in 5G. Everybody's got a mobile phone now. And then you're throwing in digital currencies, the ability to work digitally, and all of this other stuff I've talked about. Straight into emerging economies that are still building a road network, you're going to explode growth. You'll see it in India particularly. That's one of the countries that's really embracing. Yes, they're fighting crypto, but they're really embracing a digital revolution. China has done so, and we're seeing it in a lot of countries. So emerging markets are going to see step changes. So this is very good for them. So how do I allocate capital now? It's easy. Right now, there's only one asset to own. It's crypto. It's eating the world. It's outperforming everything. So it makes no sense for me to own anything else. Now, that won't last forever. As we know, there's a cycle that comes with crypto. There's points, and that's getting me interested in all of these other things. I recently tweeted about ARK, the Cathie Wood ETF. Everybody hates it. Why? Because it's gone up a lot. Oh my God, it's a bubble. Oh my God, it's a liquid. Okay, what is it? Step back from all of that, of all the people fighting the narrative. it is basically an asset allocation to exactly the themes I've talked about.
Yeah.
And there's very few people who've done that, who've even seen it. So it has a high probability of working over time. So I like that. That's a nice way of getting this. I like EU carbon credits, the ETS system. There's a futures contract. There's also an ETF that trades on it, because we know everybody is going to have to green up.
Yeah.
So that's coming. And then it's about looking at these sectors and figuring out, okay, what is the best way of playing, the EV revolution? What, is it Volkswagen? I think it might be. Volkswagen's a phenomenally good company, and they're massively underpriced versus Tesla. But if you and I know that every single person has to go and buy an EV, well, VW is going to be in the middle of that because they've been working hard on the technology. Okay, that's interesting. Biotech, that's harder. You need to know but maybe you just buy an index. I don't know, but all I know is right now it's crypto, but we're going to have a whole bunch of things that look like crypto, i.e. do this. And you have to go and look at everything in the world on a log scale, because this is going to be the exponential era.
Yeah.
It's not the era of mean reverting, normal trend. Everything is going exponential.
Yeah, you tweeted and you said you're irresponsibly long on Bitcoin. So I guess this is your main investment in the cryptocurrencies, or is it like 80% Bitcoin and the rest is Ethereum or something else?
Yeah, it moves around a bit, but I'm probably 60% Bitcoin, 30% Ethereum.
Okay.
And 10%, a bunch of others, 10 others that I chose a basket of.
All season is coming, or we're already in it. So you expect another 4-year cycle on Bitcoin, or you expect a super cycle like Dan Held said, that we go straight up to $1 million a Bitcoin? Or do you think we will see something similar to 2017, that we will see a peak this year, like perhaps October or December, and then we see a correction again, 80% or 50%?
Who the hell knows? I can't.
That's why I invited you.
I can't see an environment where it peaks early. I think the risk is actually skewed to the upside. Mm-hmm. So if I say what's underpriced, I think what's underpriced is 400,000 to $1 million is underpriced. Cheers. I think if you see Plan B recently put out a Twitter poll, I think most people are somewhere between 150 and 250. So usually the crowd is wrong. Knowing what we know about institutional adoption and this whole digital world that's developing, it puts the probability that the upside is larger than people think. And it's unlikely to be the downside where the most risk lies. Maybe the next cycle, that it would maybe disappoint to the downside, while the further out the alts and will do much better. That's how I'm kind of thinking of it. So I kind of think the 400 to 1 million range is underpriced in this.
Yeah, definitely. That's what I think. What's your exit strategy? Do you plan to, for example, if it reaches $1.2 million, do you plan to sell 25% of your Bitcoins or of your crypto assets?
Because look, I always say this is, we can have our crypto chips and we can have our lifestyle chips. It depends where you are in the life cycle and what you wanted from your lifestyle. So, whether you want to buy a new car or buy a new house or do whatever it is, right?
Yeah.
You need some money in the fiat world to be able to afford the standard of living that you have. Then it becomes difficult to think about, because we saw CZ from Binance going through this, and a few friends of mine have gone through this. They sell a chunk and then they think, where do I put that money?
Yeah, exactly. You've got
it's not about the fear of, it's not really the fear about the banking system. It's like, you know what, if I just put it in USDC, I'm getting 6% yield. Why would I even bother putting it back in? So I've thought about that. And then I've thought about, would I just give it to some people to manage? Because the down cycle is more complicated. So trend following systems-based funds in crypto, I think will do quite well.
Yeah.
But there's also this token NFT revolution going on that requires a lot of deep dive work. I'd love to give some people money to manage that part that I'm just never going to be able to know all the details of. So it's kind of somewhere between some lifestyle tokens, maybe just keeping it outside of the normal world because it kind of starts to make sense more than it ever did. And then also figuring out, okay, what's the best investment for the change in the cycle? And then, yes, then there's those other bets that we talked about that can be more equity market bets. But, again, we need to judge them against, are they going to outperform the value of holding the currency? So you've got to beat the 6% hurdle for a start, which is what you get on USDC. But, will it outperform to the upside versus Bitcoin? So I think it will over time, but now's not the time. Now's the time to take that super concentrated risk that most of us have got, which is like, this is a once in a lifetime. Well, one of the few times in a lifetime opportunity.
It is. It's the biggest chance of all times. That's what my book is called. And I think if you, act right now and wise and invest into the right assets, you will be the big winner in this transformation. So do you expect a Bitcoin standard actually? So like Safedin says, like we will one day have a Bitcoin standard?
The answer is I don't know, and it doesn't matter because it's a long time between here and there.
Yeah.
I think that the chances of it being used as the premier or pristine collateral for the financial system, I would say is reasonably high odds over time. Will it be used as the reserve for the overall system? Possible, not clear. Will it be used as money for everybody? There's a much lower probability because gold never got used as money. There's theories that certain of these kind of laws apply, where Gresham's law, where suddenly all money goes to the hardest money. Well, it's never worked in the past. It's not going to work in the future because governments and other people with different incentives change the incentives for everybody else. So I don't think so. I think it's a very multi-digital asset world. I think Bitcoin is a core or the core component of it, but it is not everything. It's impossible to be everything. It makes no sense.
It's a store of value.
It's a fantastic store of value. It could be a money. Yeah. It could be a form of money. All of those have a probability, but I don't ascribe such high probability as people who are more maximalistic in their approach would do. And I understand their point of view, but I don't think we even need to play that now. I tweeted out today a chart of Ethereum versus Bitcoin since inception.
Yeah.
And, there's an argument that all tokens versus Bitcoin go to zero. Well, Ethereum's outperformed since its inception by 250%.
Yeah.
So we don't know. We don't know, and we can't know.
Yeah. Yeah, I think altcoins and Ethereum in special will outperform Bitcoin this year. Definitely. It's like the same like in 2017, but then it will drop hard as well again. So it's always the same game, I guess. We will see if it's a new cycle. But I want to step back to another topic, demographics, because a couple of years ago, I watched a video you made and it was mind-blowing. I think it was the best video. You really nailed it on this video in the topic about demographics. I definitely will put a link in the show notes because it's a must watch. And it's called The Coming Retirement Crisis Explained, and you just nailed it so perfectly beautiful. So I watched it like 15 times or something. So and you still look young, actually. You look the same like back then. So hey, what's your secret, Raoul?
Living in the Caribbean island.
Okay, I'm coming. Okay, so please explain to anyone who never considered demographics, why is it actually the big elephant in the room?
It's fascinating. Again, there's a lot of talk about inflation, and there's so many narratives get built up. And a lot of people say end of the gold standard created inflation and it's just coming around the corner. And I've basically made a career out of betting it's not coming around the corner. And why? Why was the 70s such a unique period? That's what started me on this demographic journey. And I realized that what we had in the 70s was the wages went up, as well as the cost of goods. That's pretty rare, and not up a little bit, up a lot. Why? Well, the largest group of people in history got born after World War II, and they all started work at the same time. They all had kids at the same time. They all got married at the same time. They all bought houses at the same time. So this was a massive bulge of people that never existed, all did the same thing at the same time. Once you understand that, you can follow that group of people through their life cycle and you understand pretty much everything.
Yeah.
So they all turned around 30 years old in the late 70s, early 80s. So 30 is the kind of magic age where people start buying houses, getting married, doing all that shit. So obviously the price of goods exploded.
Yeah.
And and those guys originally, as they came into the workforce after World War II, they were able to price wages up as goods because this new bulge bracket of people created new demand. But then what happened is their wages from 1975 onwards never went up again in real terms. Why? Obviously, because the labor supply was saturated by baby boomers competing with each other, and then technology and globalization, all that other stuff. So then you look at, okay, what happens in the 80s? Well, this is when these guys start getting some money and it starts going into the stock market. And that's the rise of that. Then the 90s is when they start thinking about retirement, the rise of the index fund, the 401k, all of this stuff. Then it starts going through to why did German or European interest rates go to zero faster than anywhere else? Same as Japan, because the population was older, and they switched fixed income into fixed income. So it drives everything. That's why the cost of money has gone down. It's not because the central bank is abnormally pricing money. It's because the baby boomers shift all of their assets into fixed income over time and shun equity, because equity has higher risk. Only the US is different because it's a higher risk-seeking culture, and their pension systems are now so underwater that the only answer they can do is take more risk. So all of that describes the world. Then if you think of the world today, particularly in the US, you threw in 85 million millennials. And the baby boomers couldn't afford to retire because their wages never went up and they never had enough money and the return on assets never went up enough. So they can't retire. And then you throw in a bunch of others to compete for the wages. And guess what? Wages don't go up. So everybody's destroyed and everybody's blaming politicians and each other. It's basically because too many people. It's too many people is the biggest problem we've got. And that's great. So now what happened, which was fascinating, is all of these millennials start hitting 30, 32, 34, 35 years old. You get a recession. What we thought was going to happen was that they were going to shun finance forever. They did the opposite. They went, here's my chance to buy stock market. And they all piled in. And just like their parents did, the baby boomers, they've become financialized at the age of 30 to 35 years old. Fascinating. We didn't expect that. So demographics explains so much. We've now got the other transition is all of these old people have all of the houses. The kids couldn't afford it, but we're saying kids, this pandemic has actually shifted some of this. Yeah. Kids are moving to the suburbs where these older people are selling these houses, and they're not expensive because they're not in cities. So there may be a clearing price. Before there wasn't, because the kids wanted to be in the city and the parents wanted to live in their 5-bedroom house in the countryside, and they had to keep selling those prices down lower and lower and lower. So in the US, they've still got to sell equities. They still own too many equities. But now maybe we've got a buyer, but there's no buyer for General Electric and all of these old companies. You've got a buyer for Facebook. But these kids don't want to buy this crappy old stuff, which is why value keeps getting cheaper every day versus growth. Why would you ever want to buy some of this stuff? Now, a savvy investor may say, well, growth, I might be able to get some extra value out of whatever, but the behavioral side of that young population is going to be on growth because they need to take as much risk as possible for their future retirement. So demographics plays everything. Everything that we do in financial markets is basically somebody's savings. And that's usually driven by how old they are and where they are in their careers. And that's everything. The baby boomers, why we're so deflationary is, I saw it when my father retired. He retired when he was 60. His spending over the next 5 years from 60 to 65 probably fell 60%.
Yeah.
He stopped buying new cars.
Yeah.
He stopped spending, 50 euros on a bottle of wine and would spend 6 euros in Aldi. It's because why? Is you don't know how much your final sum is going to last you, because people are living longer. And the biggest nightmare for every single person who retires is running out of money when they're 80 years old.
Yeah, exactly.
So you become conservative by nature. You have to. And that changes the inflation dynamic too. So it's really fascinating, demographics, really fascinating.
Yeah, the Western world and Germany especially have the most have the worst demographics actually in the world. So is there any advice you could give to our politicians? Because we know our social system, health system, it will actually collapse. This is just a math. So what can we do?
Well, one thing is the world is changing.
Yeah.
And when we're starting to replace people with machines, having shrinking populations is a good thing. Japan's population is never going to replace itself.
Yeah.
Because there's no opportunities to have so many humans. So I think it's a natural consequence. What can you do for the baby boom population? Well, you've got to hope that you can generate this new economic growth world that I'm talking about. Maybe that fourth turning world generates enough growth and enough new economic models, enough new ways of running government from this unknown but exciting future that we can offset this. It's possible. Now, why should Germany ever pay for full price drugs? They should just switch to generic, which most of Europe is doing. And you can collapse costs by 70 or 80%. You can create ways to make it affordable. And maybe the cynical old world that we grew up in, where GDP growth kept falling over time, maybe that's going to change. And I have a suspicion that maybe we are. And maybe that's going to save us from the worst of the retirement crisis. Okay. But this next 10 years is going to be tough. There's going to be a lot of retirees who are going to have a terrible time of it. Yeah. And there's not much we can do for them. Now, governments might just keep printing money and giving it to people, but you're kind of devaluing the money. So it doesn't help a lot, but it helps at the margin.
And we already see that. We see the checks from Biden. We see helicopter money, MMT. They're already talking about it. Universal basic income. You said it will come. I think so too, because there were so many people will be just poor in the future. So this will be one collateral damage of this whole fourth turning. What else do you expect? Because normally if we have to switch to a new turning, and there will be sometimes war or new monetary system. We talked about Bretton Woods already. Do you expect something like that there will be social unrest or war?
I think everything has to change. Everything from all regulation to the rules-based global order system that we understand today. I think all of it will change over time. That's very much in line with the fourth turning idea. Change to what? I don't know. I do think that new world orders are coming out of this, whether there's different blocks or whether there's this global G20 currency block. How we resolve this could go a number of ways. Could we have a war? It's possible. But, it feels less likely. It feels less likely for Saudi to go to war with Iran because Saudi is also trying to massively restructure its economy away from fossil fuels. So in which case, you're not competing with Iran. Yes, they have different branches of the same religion, but that goes away if the economy's booming. People worry less about those things. Let Iran into the global economy and let it boom as well. So I'm not sure that it's there, but we understand that there is the two superpowers now, and that's not going away. India will play a pivotal role in the middle of all of that because it is a regional superpower and probably a global superpower to come. And it's kind of the buffer zone between the two. And so I don't know where the world order is going to lie. I don't think it goes to war. Will we have cyber war? For sure.
Yeah.
That's never ending now. Nation states will try and steal each other's secrets and delay each other's growth progress endlessly.
Yeah.
And that is the new war. And it's maybe even more costly than kinetic war in terms of the cost that it takes to protect and have an endless technology race, arms race. And the space race comes into that too, the control over the satellite systems of the world, So it's not going to be a bunch of tanks at a border. Everybody's at war, and this war is technology.
Yeah. Cyber war, I think is a big topic for the future, definitely. Who controls the internet controls actually the population and everything.
And he who makes advances in quantum computing, artificial intelligence, robotics controls the world.
Exactly.
Because future kinetic wars will be fought by robots and not humans.
Yeah.
So, technology is everything now. And I hadn't really realized that as much as I'm starting to realize. And it was crypto that made me realize it, because it made me think of the world in different ways.
Yeah.
It made me think about exponential upsides as opposed to catastrophic downsides.
Yeah, it's an exciting time to be alive. It's amazing, actually. And I think the future will be just mind-blowing. And I think there are much more topics we have to talk about in the future. I could really talk with you for hours and deep dive to all these topics, but I've got 2 more questions. It's totally different to money, finance, investment, and so on. What's the meaning of life for you, for Raoul?
You get one go at this. So to have the most experiences matters the most.
Okay.
And experiences to me are seeing the beauty of the world, whether it's people or it's nature, and the interactions. So, that's family and friends. That is actually all that matters.
Yeah.
And the more you travel, I mean, you're a traveler as well. The more you travel, the more understanding you are of other people, the less likely you are to be extreme in your views.
Exactly.
The less likely you are to make assumptions or jump to conclusions. And so I think, I think travel, nature, and the joy of life itself, I mean, that is what it's all about.
Beautiful. Yeah, I think the same. It's amazing. For example, you sit on the Cayman Islands, I'm in Germany, and we talk about the internet, and we just have a great time, and people can watch this forever, actually. So it's amazing, and like you said, I learned the most when I was traveling, and when I was young, and when I'm older, I met people from all over the world, all religion, all races. It was all beautiful. There are good people, there are bad people. You can't judge people about their religion or sexuality. I don't care. I don't fucking mind what is everybody doing. It's just about what it's about in his heart. Is he a good guy? Is he a good girl or whatever? So yeah, definitely traveling is the best experience you can actually make. So tell the people in the audience from Germany, especially, because I guess they don't know you so well, where can they find more about you?
Yeah, so you can find me on Twitter. That's I'm always there, and I'm usually responding. I've got quite a large audience now, so it gets harder and harder. But at Raoul, Raoul GMI, which is short for Global Macro Investor. So at Raoul GMI, you can follow me there.
I will definitely post it in the show notes, and I definitely recommend every viewer to follow him, because it's great picking your mind, reading your tweets, and you're very active. I can definitely say that, because I think every day there is a tweet from you.
The other thing is, the other side of what I do is Real Vision, which is a video. It's a media platform for finance and crypto, and it spawned all of these podcasts and all of the video channels. Everything in finance basically came from Real Vision. And we interview the most famous investors in the world, the smartest analysts. It's an incredible place for learning. Now, what's great is you can go to our free YouTube channel if you don't want to pay for something. And it's slightly out of date. There's less of the content, but it's amazing. So that's Real Vision on YouTube. We've got a podcast. You can find Real Vision podcast, which is the same in audio format. We also have a free crypto channel. So we have 5 pieces of content a week from the best, most amazing people in the whole crypto world.
Cool.
It's extraordinary. It's free. Just sign up with an email. So realvisioncrypto.com or realvision.com, and you can find the crypto. or realvision.com, we have membership tiers as well. So we have the essential, the pro, the plus and the pro. So depending the kind of depth of knowledge you want, we have education as part of that. We have a community where you can exchange ideas with people. It's all there. So it's one of the greatest financial resources. I'm really proud of what we've managed to build. So Real Vision is the place to hunt out all of that.
Definitely. I'm a subscriber and I never regretted it. And I can definitely recommend it because you just pick the brains of the most intelligent people, the smartest guys in the room, actually. I always say, if I'm the smartest guy in the room, I'm in the wrong room. So that's why I'm talking to you, to learn more. And I will definitely put all the links in the show notes. And I have to say, guys, if you want to deep dive into macro, Bitcoin, cryptocurrencies, everything actually.
Demographics, it's all there.
Demographics, it's all there. It's like financial intelligence. That's what my YouTube channel is called, Financial Intelligence. It's all there. You will find something and it's definitely worth it. You can learn more than at a university. So I definitely recommend it. Raoul, it was mind-blowing. It was great. I still have goosebumps and I would like to invite you again if you have time because I think we could talk for hours.
Yeah, I think we only just touched the surface of all of this stuff.
We just started.
There's so much going on, and it's a fascinating time to have risks that are changing but still there. So we've got an old system and a new system, both happening at the same time. What a time to be alive.
Yeah, amazing. So thank you very much for your time and looking forward to talk to you soon again. Take care and stay healthy, of course, and have fun.
And you too. Thanks so much.